When I look at this, I say to myself, is the market fast? Is the market slow? What's it doing? And it's obvious that when you entered into this trade on the Atlas line at 1186.75, I want to look straight down and I want to look at what the current market conditions are. So regardless if you think the market's going to move 1 point or 2 points or 10 points, the current market conditions are almost always exact. I can expect to take 3 points on this trade, period, because the average true range of the last 4 or 5 bars has told me they averaged about 3 points. This is what I can expect. So if you think to yourself, I want to take 5, you're never going to get it. If you think, well, never going to get it is a very loose term, but don't expect it. Expect 3 points. And so as we move forward in time from 1286.75 to 1283.75, the market hit 1283.50. So you entered here, you knew you wanted 3 points. Even as it starts moving down a little bit here, you can say I'm going to drop it down a tick to 2 3/4. You still got it. And the market did not continue further beyond that. So if you wanted 4 because you insist on getting 4, you missed it. But if you based your calculations on the current market activities, then you know that you're able to achieve what the current market conditions can provide to you. Shannon, I'm using NinjaTrader. I prefer NinjaTrader, and I'll tell you why. Shannon, I'm going to forward some messages here so you guys can see what everybody's writing here. Tony, can you hear me okay? All right. Tony ditto. All right, so the key here is to use the ATR to tell you how much profit you should be taking on any trade. Okay. The same thing here with the double bar long on the Atlas line that occurred. Double bar long at 1191 was this right here, 1191, right over here. And so 1190, this is yesterday, 1191, price went up. I looked down. It is about 2 3/4 of a point. So 1192, even if you got a bad fill, 1192, 1193, 1194, 1194.50, and look where the market moved to exactly, right? Went right up to the what the average true range told you that it would move to, from here to here. And therefore, I'm going to say to you, if you're not using something that is precise and you're just jumping in thinking, I'm going to get out here, I'm going to go for 2, no, I'm going to change my mind, I'm going for 3 or 4, it's not the right way to do it. Be specific and know exactly how much profit you want even before you enter the trade. Stops work the same exact way. I use 3 separate stops each time I trade. Alright? Nadar, you should be able to access my my charts, Nader. If anyone is having trouble, just exit the room and re-enter. I'm moving my cursor right here. Okay, Nadar? Alright. Very good. Now, this is the Atlas line. This is yesterday, and if you want to look at the day before yesterday as well, the day before yesterday is right here. Okay? On October 10th. 1177, and the at the open method 1176.25. Alright, both told you to go long. So let's take a look. Let me remove the Atlas line here for a second. Actually, let's take a look at what's happening right now on the charts. Yeah, look at that. Alright, so in the beginning I showed you the Atlas line here. This here is 1201.25 to go long, right? Simple. It's a leading measure, Josie or Jose Perry. I would say it's a leading indication of how much profit you should take and how much stop you're also going to take. It's a measure of the market, Josie. I'm not using it to enter or exit the market. I'm using it to tell me what the current market conditions are, okay? Josie, I think it's Josie. And so look at the Atlas line right here. If I said to you, give me a reason to go short, I have no reason to go short. Price is above the Atlas line. We got a signal to go long. To me, it's a no-brainer. Let's go long, right? Fantastic, Nader. Nader, do you mind if I post that? Let me just post that. There for you. There you go, Nader. So everyone can see Nader Haddad has to say here. The Atlas line is a proprietary software that I provide. Jose? It's one of the methods that I teach. Everything comes with a training session. So I offer a training session with each purchase, whether it be the at the open method or whether it be the Atlas line or scalping. I want to make sure you guys understand how to trade this and how to trade the price only. Okay? Sure, you got it. Hey, Navnit. Alright, very good, guys. Rob, so I do post the questions here. As soon as somebody, here, I'll post your question here. As soon as somebody asks a question, I will forward it to everyone. Alright, Rob? Price action trading is very simple, Craig. No problem, Frank. You got it. Price action trading deals with looking at the bars, interpreting what the bars are telling you, and trading off it. So this is a long setup here on the at the open. Now I explained these methods in the at the open course. Why am I going long here at 1203.50? And why am I going long here at 1201.25? It's specific. It's mechanical. And it's based off of price telling me and showing me and proving to me that it should go long. So one of the methods that I'm going to show you, Rob, today is called the ABC pattern. I talk about it in a few past webinars. Everything that I'm showing here based on my methods, based on price, is telling me long. And so when I think about trading price, I'm not basing it on candlestick interpretation. I don't have any indicators on the chart as far as the conventional MACDs or stochastics or Bollinger Bands, anything like that, even calendar channels. I have none of that stuff on it because I want to make sure that I'm reading just a simple price. My favorite platform is NinjaTrader because it's simple. Almost every broker now supports it. I'm getting about $4 a round turn in commissions through my broker. And so I'm not being taken to the cleaners using NinjaTrader. And it's free to use and download in simulation or demo mode. So in my opinion, you really can't go wrong. All right. I always use. Here we go. No problem, Frank. Let me just forward a few messages here. When you say double bar long, suppose it goes against you. Should I wait in the trade? When this says double bar long, it's telling you to go long at this price at 1201.25, right? It's telling you 1201.25. Now, if you miss the price and you get a better entry, even better, okay? But if you are in a trade and it closes on the opposite side, this is what I call a prove it stop when using the Atlas line. Price just proved to you. This is how I use price, the proving model, price proving to you that it does not want to go higher. There's no need for me to stay in the trade any longer. Price just proved that it's closing below the Atlas line. Instead, let me think about going short because now I have proof. That's one of the stop strategies. I'm not even going to attempt to say your name, Ran Ganayaki. I know I massacred that one here. Canoe, I always use an ATM strategy to enter and to exit trades. Always, 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 always. I always use it. I never trade without it. All right. Frank, no problem, Frank. Glad you're here. Remy, are the entries automated? Do you use an ATM strategy for profit triggers and stops? The entries are automated, as you can see them, to enter into the market, and then I use the ATM strategy to exit with profit and stop. But they do have to be adjusted, Remy. It's not everything's not automated. You still have to enter into the market. I want you to understand what's happening, and I want you to be clear on the reasons why. You got Ranga. I'll call you Ranga. You got it, Ranga. All right, Craig, when I look at risk to reward, most traders rely heavily on those numbers, right? And I'm going to show you the ABC pattern in just a second, which starts here at 9:30 and goes to 12 o'clock. Okay? So speaking on how to trade price, I'm looking to see what happens between 9:30 and 12 o'clock for a setup in the ABC pattern. So a lot of traders say, I want to make 5 points and risk 1 point. The problem with that is that all the books that you read at Barnes & Noble say that's the right thing to do when you trade because it makes sense. But the reality of it, you can't risk 1 point and expect that you're actually going to even stay in the trade to make that 5. It's almost luck that you aren't going to get stopped out with a 1 point stop. So a risk to reward model based on theory is not going to work. You have to have initially a more liberal stop to put you or to keep you in the trade. And instead, let us use something else, something other than a hard stop to exit the trade. So here is a perfect example. The example is I want to go for 3 points of profit. And so I place a trade and I have a 1 point stop. The average true range, if it's telling you here 3.25 points, I want you guys to understand what's going to happen. The next bar can potentially move down 3 points before it moves up 4 or 5 points. So if you get into the trade here, let's say right there, right? Let's say right there. If you get into the trade right there and you have a 1 point stop, the current market conditions are already telling you you're never going to stay in this trade if you have a 1 point stop, because it can fluctuate 3 points without any issues. It'll just go up and down 3 points. So you can't trade on that model. You have to look at it in a different light and say, let me have a catastrophic stop in case this thing goes heavily against me. And instead, let me use a prove it stop and let me use a time-based stop along with my ATR to actually exit the trade if it doesn't go in my favor. And so this is how I look at trading the markets. I put a more liberal stop when I start out in every single trade because I want to stay in the trade. Even if you say to yourself, I want a 3 point stop, the likelihood of the market moving 3 points down before it goes up is huge. It can happen. All right? And so I want you to think about, is the current market conditions valid for you to have a stop that's relative to what you want to do? If the market is moving at 1 point on the average true range, then sure, absolutely. Just go for a 1.5 or 2 points of profit. I'm sorry, a point or a 1.5 of stop, because within that time frame the market can move up and down a point and you can have proof of that. But you cannot have a tight stop when trading. It will almost always knock you out unless you're lucky. And I don't want to trade on luck. Steve here says, I came late. Could you please put an arrow and point and restate what the trigger is? Sure. Steve. As an example, the double bar long trade here, 1201 quarter, occurred for this reason and this reason only. 2 consecutive candles closed above the Atlas line. This closing price is this number here, 1201 quarter. So I have now validation that we're trading above the Atlas line. Provides me the signal. I'm going long 1201 quarter. I look down. I want to get 3 points, 3.25 points out of the trade. And you can see that 3.25 points was achieved no problem. All right. I use ATR with currencies as well, Shannon. Absolutely. Okay. Correct. So you set the ATR target and stop at same based off the ATR. I do not, Craig, use it as the same as the ATR. I go a little bit more than the ATR to ensure that I stay in the trade, Craig. I'm not just going to put it because, like I said, one candle could potentially move down 3 points. So it's got to be a little bit more than the ATR just to keep you in the trade. Okay. The dotted line that you see here is based on wanting to go long at 1203.50. So I want to go long at 1203.50. This is the at the open method, 1203.50, and this is my limit order to go long at 1203.50. When this price touches 1203.50, this dotted line stops plotting and you're filled. All right? Harmon. I don't want any slippage on the trade, Remy. I always use limit orders when I trade, always. Okay, Remy, slippage. Okay. So Remy, I don't use any ticks of slippage. I'll show you a currency chart in just a second. Your Atlas line says that at present trend, the market will not go beyond this. Am I right? Ranga. You're welcome, Remy. No, not quite. Not exactly like that. I am going long here for a reason. I'm going long here because 2 consecutive closings occurred above the Atlas line, and so I'm going long. I want exact profit of 3 points, and I got it right there. Now, if the market comes down and closes below the Atlas line, then my whole observation has changed to the short side. So right now, everything and anything is telling me for the Atlas line, price is long until I have the proof otherwise that it's going to go short, and that would be considered a closing below the Atlas line. That's how it works. All right, great. So 1203.50 is going to be my entry on the at the open method, and if this isn't reached, you're going to see another order to go long way above the market as well. And this is all explained in the course, the at the open method for the at the open trade. Somebody wants to see a currency here, so let me pull up a currency chart here. Hopefully it will not freeze up on me here. Yeah, perfect. Okay, so we have a euro chart, right? So somebody wanted to see a euro here. You got it, Ranch. This is the euro currency. So euro currency is telling me long 37.62. So those of you who have the Atlas line, we all have the same numbers. Nothing here is subjective or changes. Everybody gets the same exact values. 37.62, we're long. Okay? And 37.62, I'm long here. I look down. It says here 0.00142. What is 0.00142? Very simply this. Move the decimal 4 places to the right, and you have your number, which is calculated in ticks. So 0.00142 is the equivalent of 14 ticks. That's what you would want if you took a trade right here and now. Okay, that's how the ATR works on currencies. All right. I would recommend the Atlas line. Let me see here, Joyce. I'm sorry, not the Atlas line, the at the open method, because the at the open method is an actual course that teaches you something on how to trade. And it's not software only. It comes with software. So I think the at the open method is an excellent start to trading, and it's completely objective. Here, the at the open method on the currency, on the euro, it told you 1.3779. It retraced back to it. That's my entry. Okay, Joyce? The ATO is completely different than the Atlas line. Completely. I mean, it's not even the same. The at the open method told you to go long at 37.79. You wait for it to retrace, and you got it there. It's different because it's a course. It teaches you the method and how to use it. And it comes with software. The Atlas line is just software that you add to your chart, and you both methods. So you get a webinar with me, but you follow the Atlas line according to the rules that I show you. So they are completely different, Craig. Doesn't matter. Range, oil, euro, gold, E-mini. Dan, there are two setups here. The first, let me show you here. The first is let me take off the at the open. Here is the Atlas line. The Atlas line told you to go long right here on the euro. Okay? Period. The at the open method is a method that you actually learn how to trade, and it comes with software. And I added the software, and so the at the open method is right there. Okay? You can use the at the open for currencies, absolutely, David. Okay, a few questions here. Let's take a look at the E-mini. Alright, so you see, before I switch to the E-mini, you see here on the euro today, double bar long, at the open, everything looks good to me. Everything looks good as far as trading wise. You want to go to yesterday? Here's yesterday. I'll get to the questions in just a second. Here's yesterday on the euro. Here is double bar short, 1.3587 right there. Here is your profit. I look down, 14 ticks. I know you got the 14 ticks from here to here without a problem. And then you have a double bar long right here to go long. What do you think? You think the Atlas line was right on the euro, both on the short side and on the long side? Absolutely. Without a doubt. At the open, let me remove the Atlas line here. The at the open method, the only signal it gave you on the euro yesterday, long setup, 35.97, and there it was. That's the at the open method. Here's the at the open method for today, just the at the open method right there. And if we switch to the E-mini, ES12 here, here is the at the open method at work, telling you to go long 1203.50, or if price now starts to shoot higher, we have a chase to trade entry. It's part of the at the open method. The software plots this for you. So what you're seeing here is only part of the at the open method. Okay? Okay, so let's go to a couple of questions. All right, I'll put back the Atlas line here. So far, is anyone giving me, or is there anything here telling me that I should go short at any point right now? The answer is no. So trust the price. I always follow the price in each trade that I take. I never trust what I believe or what I think or what the news guy is saying. Trust the price. Price is telling you something here. Alright, so let's take a look at the questions. Can the ATO trade for currencies? David, the answer is yes. I just showed you the euro. Jim says here, where do you put stop once you get in the trade on the Atlas line? I use 3 stops, Jim. First, I use a catastrophic stop. Each time that you actually enter into a trade, you have to use some type of catastrophic stop that will protect you in case something goes awry. So that's the first and foremost, catastrophic stop. The second thing is I want to make sure that I'm basing my profit targets and my stops on the current market conditions. So once you enter into the trade, especially in the Atlas line, you want to have proof. My proof is if it closes below the Atlas line, I'm out of the trade. The other one is called a time-based stop. And so if the market moves X amount of bars or X amount of time, there's no reason for me to stay in the trade. A trade we enter because we want it to go immediately to profit. If it doesn't, what's the determination that an hour from now it's going to work? Or 2 hours from now it's going to work? It's not going to happen. You're in, you're out. We're day traders. I'm a day trader. We're in, we're out, and we are... the reason why we enter is because we want immediate targets, right? We want immediate target. And so don't hold the trade, guys. If it goes against you and it's more than half an hour or so, why stay in the trade? It's over. Get out of the trade and let's look for another trade. And there are so many trades that we can look for during a day. There's the Atlas line trades, there's the at the open trades, there is the power price action trade, which is something completely different, which we may have a power price action here coming up here soon. Let's take a look here. Yep. And so everything that I teach is based off of, and I'm going to show you something very interesting in just a second here, called the ABC pattern, which I hope you guys stick around for. The ABC pattern is a way of looking at how price throughout the day, if it's going to be a trend, I want to have proof of that. And so with the at the open method, I want to absolutely make sure that one second, guys. You guys are Skyping me here. All right, hang on, guys. I'll answer your Skypes after the webinar. All right. All right. My dome is right here. Okay. Here's my dome on the screen. 1208 quarter is my entry. Okay.
Order pending.
You see what happens here on the at the open software here. Bob, how are you, Bob? All right. Alright guys, let's see what happens with this 1208 quarter on Chase the Trade, okay? You got it, guys. Bob Cunha, how are you, buddy? Alright, I want to actually teach you something here on the ABC method. While this thing is working up, right? This is based on the at the open method. This is the double bar long. Here is the at the open 1203.50, and here's the at the Chase to Trade 1208 quarter. Did I miss it? Oh, maybe not. Let's see what happens. Alright guys, while this thing is going, I'll just put this off the line. Well, let me show you here the ABC pattern, and let's start with yesterday. One of the things that I like to look at is a day as it develops. Alright, rainy day in Jersey, huh, Rob? Bob? It's going to get cold now. You got to come down to Florida. one of the things that I look for is days that trend. You know, you can look back on a day and you can say to yourself, hey, I could have went long early on and the entire day went up or the entire day went down. What could have made or helped me identify this, right? What could have helped me identify this? And so one of the things that I use is the ABC pattern. And the ABC pattern is something very simple. Again, everything I do is based off of price. I try to incorporate my analysis on the price, on nothing else. And so think about dividing the day up into three sections. Dividing the day up into three sections. So I'm going to start off with 9:30 in the morning. At 9:30 in the morning, I have the market open, and typically from the first 2.5 hours of the day, from 9:30 to 12 o'clock, we have the best opportunities, in my opinion, to trade. Now, can anybody tell me why you think in the A part of the day, I'm going to just put an A over here, the A part of the day is the best part of the day to trade? What do you think? What would be the reason for that? Volume, Brian, very good. Absolutely. All right, Shannon, you too. The best trades set up overlap the euro market. Yeah, that makes sense. Okay. I have to say that the A part of the day is the best part of the day to trade, and the reason being is because there are systems, trading systems, that are entering right at the open. And a lot of these trading systems, because brokers need to monitor the trades daily, these systems are working not on overnight trading, they're working on intraday data. Okay, brokers, in order for a system to be working overnight, there has to be, by certain CFTC regulations, they have to be somebody monitoring the system overnight. So a lot of traders just trade methods and systems that are not overnight but are day session only. And so a lot of systems enter and exit based on whatever the method they're using in the beginning of the day. And so you have a huge influx of volume as the day starts. It could be for position trading, it could be systems entering, systems exiting, it could be swing traders, whatever the case may be. But there's an influx, and it usually occurs within the first 2.5 hours of the day, right? And so the A part of the day, Jeff, okay? The A part of the day is based on this here, from 9:30 all the way to 12 o'clock, okay? This is the A part of the day, the first 2.5 hours of the day. So we have the first 2.5 hours of the day is the A part of the day, right? So to me, if you're going to trade, and if you're, unfortunately, I have a lot of Australian clients and it's midnight out there, and so I have to say, if you're going to trade, the opportunity in the middle of the night is when it occurs.
Order filled.
Right? And so I want to look at this and I want to say, let me get my opportunities here in the A part of the day. Now, as the day progresses, we are going to enter into the B part of the day. Hey, Enrique, I'll see you next Tuesday. You got it, Enrique. Yes, Eastern Standard, Tim. Absolutely. Eastern Standard. Eastern Standard. Absolutely. Eastern Standard. Okay? And so, Eastern Standard is when we look at going 9:30 when the E-mini S&P opens to 12 o'clock. All right? And so, this is the A part of the day. Now, the B part of the day is right here, is the B part of the day. And this occurs from 12 o'clock to 2:30. 12 o'clock to 2:30, right there. All right? And so this, I'm going to say it's from 12 p.m. EST to 2:30 p.m. or actually 14:50, right? I'm 14:30, right? 14:30, right? Same thing, 2:30 p.m. And this is another 2.5 hours, right? To right here. Now, the reason why I'm doing this is because I want to interpret the day based on price, right? I'm not looking at the Atlas line. I'm not looking at the open. I'm just looking at what price is doing, okay? And so if you're filled on the, well, if you're going with this ABC pattern, we want to get filled on entering into the market with a reason on price, with a reason. Why am I going long or why I'm going short? Well, typically, when you look at the A part of the day, here, like this here, you can expect something, a trend, a move, up, down, whatever the case may be, you can expect this to occur. Okay? You can expect this to occur. A move. And so yesterday was no exception. We have the A part of the day is being a move occurring to the upside, right? Now, when we go to the B part of the day, when we work to the B part of the day here, I want to say to you, typically, B does something about, let's say about 85% of the time. 85% of the time, B will start trading in a range. It will start trading in a range. B will be in a range, back and forth, back and forth, back and forth. And so I have my expectations on this B part of the day from 12 to 2:30. I know what to expect. I know what I want out of the trade. So when you look at the B part of the day, I want everybody to think to themselves, haha, it's the B part of the day. All right, Phil. You got it, Phil. Tell me why you think the B part of the day starts to flip-flop like this back and forth. What do you think, guys? Lunchtime, right? Everybody says lunchtime, right? Well, I gotta tell you guys, Heather in Australia is not having lunch. She just put up a video testimonial a couple days ago. Heather in Australia is not having lunch at midnight. The reason why is not because we're all having pasta at 12 o'clock. The reason is because this continuation of entries, whether it be position trading, swing trading, entries on systems, it does not continue. It does not continue into B. It stalls and it stops because there's no follow through, or there's no accumulation or into that or distribution. It just starts to dry up. So it's if you guys remember in the 90s, everybody say it's lunchtime, let's go stop trading and let's have a break. But it's not quite like that. The reason why is not because people stop and have lunch. The reason is because the volume of entries and exits start to dry up compared to the start of the market. Okay? And so I want you to think about the reason why B does this. Now you could say it's because of lunch, but in reality it's because there's no follow through and more buying or continuing of buying or selling that will continue to drive this market up or down. It just starts to dry out and then you start getting flip-flop. Now there is something that I want you to know about this. If this occurs 85% of the time, right, then I can expect this 85% of the time, this whipsaw, right? But here's a huge but, guys. What if we have proof that the market isn't whipsawing and it starts to move higher or starts to move lower? Well, that would be an estimation that we are now going into trend status. We're now moving into a trend. And the basis for that is by showing us that almost always B will be contained within the range of A. And so here is the high and low of A, right here. And you can see that B is contained within the range of A. And so it's doing exactly as I expected. It's doing exactly as I expect. Right? It's doing exactly as I expect. And therefore, this is what I expect. Now, what if we have price moving at 12 o'clock here above it, or at 12 o'clock here below it? What does that mean? That means that we are looking to go short or to go long if two consecutive candles close above or below the range of A. That will start to tell me pretty clearly that we're breaking the range of the A part of the day and we have a trend. This will equal trend. Alright? And so two consecutive candles above or below, I am going short or I'm going long based on that proof of price. Questions, guys? Sure. Let me show you here a sorry about that. Let me show you here a yesterday, or day before yesterday. This is yesterday. So let me show you yesterday here. $9:30, 12 o'clock. Here's the range of A. Oops. A part of the day, like so. And I'm looking to go long if two consecutive closings occur above or below the range of A in the B part of the day, right? So let's take a look here. 1 second here. Let's take a look at this. Did price have two consecutive closings above A in the B part of the day? What do you guys think? No. There is your proof. There is your proof. Okay? There is your proof. You need that proof to tell you that you should go long or you should go short. This applies, Tim, to it's right here. Hold on a second, guys, here. This applies to, you got it, Bob. I'll see you next time, Bob. Thank you. This applies to Forex, this applies to currencies, this applies to E-mini. It works. It's price. So we shouldn't be concerned so much on the market, but if the rules on trading price exist, and that's correct. Now, another question I have for you is, let's go back to another day here. Here is 9:30 here. Here is 12 o'clock. Here is 14:30. Right? And so we have here A. This is the A part of the day, right over here. This is October 7th. Alright, now, if this is A, what can I expect in B, guys? I just said to you, what I expect in B is for price to be consolidated here, back and forth, like this. Right? And so, no, I got out of that trade, Jim. The 1178.50, Jim, that just occurred. I'm not in that trade any longer. I got out of the trade, and it wasn't filled. I'm showing the E-mini S&P. Okay, let me first explain this to you, okay, and then I'll go back to some questions, all right? Tim, I'm showing you the E-mini S&P, E-mini S&P, E-mini S&P, October 7th, okay? Tim? Okay, so now, don't be confused. Craig, 2 consecutive closings have to occur in order for me to think we're in a trend. So in B, I expect price to be contained within the range of A. But it didn't. It wasn't contained. We didn't get that whipsaw that occurs 85% of the time. What we got was 2 consecutive closings below the range of B. You see that, Craig? So this is a short entry as soon as this candle closes. And the last example, Craig, if you're referring to the last example, here, let me show you. I don't know if you need to put on some glasses. Do you see here 2 consecutive closings above the range of A? Craig? Hausner? No. Right? I'm just playing with you, man. No. 2 consecutive closings. 2 consecutive closings, man. Come on. 2 consecutive closings. Above or below. Right? That's 1. Right? And then the next one closed below. Right? That's not second closing above the range of A, man. Craig. Candlesticks, bro. Look. Opens there, closes there. Opens here, closes here. This is closes here, opens here. Doji. Right? So open, close, open, close. 2 consecutive closings will trigger a trend. Got it? Okay. Very good. Don't make me get out that Trading for Dummies book I have here in the office somewhere. I'm just playing with you, man. So, you gotta have a sense of humor when trading, guys, right? You gotta have a sense of humor when trading. So, you gotta have 2 consecutive closings. So, you don't have proof, right? You need proof. So, let's take a look at the previous when we do have proof, right? 2 consecutive closings gives you a short, right? Entry, and you take it. Now, above and beyond that, let me go to a step further. Let me just go a step further with this. If I did this A to B relationship, let's also do a relationship based on B to C. I mean, I call it the ABC pattern for a reason, right? I call it the ABC pattern for a reason. So the C here works like this. This is the range of B, right? The range of B. And so I'm looking for what happens in C to be 2 consecutive closings above or 2 consecutive closings below. All right? And here, if I push this into the future, here, we have here 2 consecutive closings, 1, 2. Now this is at 3:30. There's still time to trade. It's not that late, right? Usually you can trade up to 3:45 and still be okay. So if you go long here, right, in anticipation of the market now trending higher, and it doesn't, let me introduce to you the prove it stop. The prove it stop is going to be the first candle that closes, proving to you that it's not able to move higher. You're out of the trade. So if you go long here, you got to get out of the trade on this bar. It just closed right back in the range of B, and you're out of the trade, right? Now, these trades work best. They work best if you can catch them either right in the beginning, right when B starts here, right? Or right when C starts. Those are the absolute best trades, and it'll be a trending day. Okay? All right. Now, let's take a look at another example. Remember, we don't get a lot of trending days. Trending days typically occur, I'd have to say, maybe 15% of the year. So this is an excellent way for you to catch it when it occurs. So here is 9:30 to 12 o'clock. Here is A. This is October 6th. Here is the Atlas line and the at the open. Man, great trades. Atlas line caught it, at the open method caught it. We get a move, A part of the day, best part of the day, period, hands down, right? Now, if you look into the B part of the day, remember what I said about B. B will, now I'm just going day by day, I'm not picking and choosing days. You can go back in history on any market and do the same exact thing. Here is B, here is 2:30, which is 14:30. And let me just put this into the future. Did we have 2 consecutive closings occur above A or below A? What do you think? Absolutely not, right? Absolutely not. And so when I think of this, I say I don't have anything. We don't have a trend. Now let's use the same exact model and compare B to C. Okay? This is C right here. And so what we have here is this. Now I look into the future, right? And I say to myself, do we have an instance where 2 consecutive candles closed above C? And yeah, we do. Right here at the end of the day. So it's no good. So technically, C was contained within the range of B. Right? A lot of guys trade support resistance. Right? A lot of guys trade support and resistance. What a great way to know B trading support resistance and C trading support resistance based on what I just showed you, right? News events are a big problem. I do not try to trade or catch news events. I stay out of them. Sure, see here, Tim. For example, we have the range of B, right, Tim? Over here. So let me just show it to you. Here is the range of B. So would you say that we've encompassed the range of B? Here, I'll even change the color to maybe gold. Let's see what that looks like. Yeah. Right? What do you think, Tim? Now, I'm looking for proof that the price now has a late day rally or a late day sell-off, right? Remember, late day rallies or late day sell-offs are big deals. So they occur the last half hour, last hour of the day, market just jumps, right? And so I'm looking for that proof of 2 consecutive closings above or below this range of B that I just created. And so now as the market starts to plot, right, I'm just put a line here into the future. I'm looking for 2 consecutive closings outside of this range in B, right? And The only time I have it is here, but this is at 1400, which is 4 o'clock. It's too late to trade. Okay? A has no relationship to C, Jim. That's correct. A has no relationship to C. It's A to B, B to C. Larry, good seeing you, man. I wait for it to finish, Shannon, the news event. Sometimes the Atlas line triggers at these times, absolutely. Bounce trades. I mean, here we have, this is called a pullback trade on the Atlas line, which I teach during the Atlas line webinar. So this is Atlas line pullback, another Atlas line pullback, strength trade. I mean, there's so many trades here. I lost count. Let's take a look at what's currently happening now. All right. This is going to be an Atlas line long right here. Trade. If that candle closes, this is a green. This is a measure to go long. If this is a green candle. Okay? Trading officially closes, Tim, at 14:15, which is at 4:15 Eastern Standard. I'd stop looking at the market at about 3:45. Okay? The power price action method is a DVD course in the DAD, which is, I'm sorry, Nader. The power price action is a DVD course, any market. It works on currencies, Forex, indices. Great for swing trading, great for day trading. It's an actual method that teaches you how to trade price, the power price action. It's excellent. I think it's it's very easy. It doesn't come with software, but it's an actual method to trade. All right. So now coming up to 12 o'clock, what I want everyone to do, oh, there's that long. Oh, I missed it. It's hard to trade and do these webinars because you miss these trades. This was 1208 quarter long. It's supposed to be a stop with limit or a limit order right at 1208 quarter to go on. I cancel that order because I didn't get in. I want to get in at 1208 quarter. I don't want to miss this. This is a long over here. It just works, Craig, at the open, the initial start of the day. There's no other trade. It's only once or twice a day tops the at the open, Craig. It's just the first initial trade of the day. That's it, Craig. The at the open. The Atlas line works on oil, works on gold, works on everything. Mark, if you want to see, let's take a look at gold as an example. It's not going to let me pull up the chart. Let me go to crude oil here. Let me show you that. I have a student now starting. Let me show you crude and oil before I let you guys go. I just have to close this down and restart this, and we'll see this in a second. And I'll show you crude and oil on the Atlas line. And Forex too, Tim. It works on Forex. If you have the Atlas line, you can set multiple Atlas lines throughout the day. It works all day long, the Atlas line. Lots of trades. It's one of the tools. It's only based on price. All right, so there's crude light. But damn, what happened to crude? Look at that. I don't know if that's right. Okay, so this is crude oil, the Atlas line. Double bar long on the crude oil. You can have Atlas line all day. Yeah, there's something wrong with the data here. I reload all historical data. Yeah, I don't think that's right. We'll see what happens. But this is crude oil. And while it's reloading data, probably just I don't know what that is. Look at the Atlas line here in the back here. Alert. You can have a wave file. There is no parameter at all with a number or a value attached to the. It's a bad tick, yeah, David. Oh, because I have 1212. That's the problem right there. You're absolutely right, guys. I have the wrong. Absolutely right. 12:11. I didn't upload the right one. Let's go to crude, and then I'll go gold, and I'll bring back. You're absolutely right. Thank you. And there's the Atlas line for gold. Thank you, Jesse, for advising me on that. I didn't know that. Atlas line does not work on stocks. The power price action works on stocks. The power price action works on stocks. Not the Atlas line. The Atlas line needs 24-hour data, and it's not going to work. So this is gold for today, and I'm going to just add crude oil. Okay, so you guys can see what it looks like to my tools here. As you can see, I'm not a crude trader, or else I'd have that. Give me just 1 second to add the crude oil here. 12:11. Okay, it's done. Alright, so this is the gold, the December gold, long 60.80. That was the right trade. Short when it crossed the Atlas line. That was a good trade. And this is also the at the open method, telling you to go short right over here. Right there. Alright. So I wanted to show you that the Atlas line does not have any whatsoever parameters. You don't have to optimize it. It takes price completely. It takes price completely and tells you and does the calculation. So you don't have to optimize anything. It's done on a per market basis. You can increase the size if you want this smaller or larger. That's all you can do with the text. But it's not created for you to optimize. There's no parameter attached to it. Okay, so don't we have to worry about what do I use as far as parameters. There's no parameter whatsoever. Okay. For the crude oil, let's go to crude oil, and there it is. There's the long on the crude oil. All right, that seems a little bit better. This is crude oil. The ATO course is 80 pages. I think 85 pages, Craig. Teaches you the at the open method and the chase the trade method, and it comes with software. The at the open course. And it comes with a webinar too, Craig. So I actually go in and I give you a live training. Everything I do is live training. The Atlas line, after purchase, we do a live training session. At the open course, it comes with live training. My goal is to make sure that it's clear after you read the course and get the software that you understand the rules. All right, correct? Sure, absolutely. Continue training. If you contact me and you want to do a webinar, absolutely. Feel free to call me up and we'll set something up. Igor, the scalping course, I have two. One is based on a 1-minute chart. The other is based off of a tick chart. The tick chart is scalping, counter trend scalping using a 250 tick chart on the E-mini. The trade scalper uses 1-minute bars on every market. So the price action scalping is a scalping method just for the E-mini counter trend. The trade scalper is 1 minute on every single market. And it comes with software. They both come with software. Igor. I'm in Florida, Jesse. In Boca Raton, Florida, near Miami, near West Palm Beach. Yes, it works on SIM. It works, Tim, you don't have to have a live account. And if you need a NinjaTrader demo account, I can provide one to you as well. You got it, Igor. It's different, Craig. The at the open method is just one trade, and it's a method that you learn. The Atlas line is not. It's software. You don't learn. You learn the entries. You learn the exits, but it's different. Different strokes for different folks, right, Craig? Tim, why don't you email me? Or actually, if you go to my website, there's a NinjaTrader button. You can get a live demo there, Tim, as well, on Daytradetowin website. Okay, you got it, Tim. Tim D and Tim Reese. All right, guys, I'm late for a webinar here. I have a private student that we started at 11 o'clock. I'm 15 minutes late. Sorry, Jason. So I'm going to shut down the room. If you guys happen to have any questions, please give me a call. I have a toll-free number, or email me, or Skype me at Daytradetowin. Use the ABC pattern. Look at 12 o'clock here. Look at 12 o'clock here and say to yourselves, is market going to do what it typically does, or is it going to be in a trend? And let me have proof of that. So right now it looks like that. Oh, I'm sorry, I'm in the wrong. This is crude light. But listen, it works on the crude light too in every market. Right? So E-mini, crude light, actually can't work in the crude light because the crude is gonna stop trading. It closes earlier than the E-mini. Yeah, look at that long. I missed that long trade. Alright, so this is a long on the Atlas line pullback. This is an Atlas line pullback trade. Greg, if you have... you know, I just took myself offline. Here, I'll show you. Because you guys are Skyping me. There you go. Now I'm online. Isidore. How are you, Isidore? Atlas line working on TradeStation, okay? Isidore. Alright. You got it, Isidore. Thank you, my friend. All right, guys, I got to run. I got to start with my student here, Jason. He's been waiting patiently. I will talk to everyone soon.